Good evening, respected executives. Uh, am I audible, sir?
Yeah, very clearly.
Okay, sir. So, on behalf of our CBOA, we welcome you all. In the direction of our GS, this executive training session is initiated. And today we have our respected, experienced faculty. He was handling credit section previously in HO, retired PGM. Welcome, sir.
Thank
Uh,
you, sir. Thank you.
Sir, can we start, sir?
Yeah, sure, sir.
Thank you, sir.
Yeah. In that turn, now for annotations, I will search recording view, speaking language, English. Yes, 1 minute, sir. Here. More apps, captions, record, annotations, chart, sign in. Okay. Okay, recording. Okay. Yeah, share. Yeah, disable. So the screen sharing it is to be enabled,
Okay,
sir.
I will enable you, sir. 1 minute, sir.
Yeah, please.
Sir, please check now, sir.
Yes, sir. Yeah, it has come. Share sound. Share. Yes, now it has come. Annotate. No, disable annotation for others. Yeah. So annotations. Yes, sir. Yeah. Sir. Yeah. Screen sharing. Yes, sir. Annotation. Yeah, good evening, friends. Shall we start our today's session? Today we will start with the important points in recovery policy and restructuring policy, and also some important aspects which regarding credit policy and CRM policy, which are not covered by my friend Ravi. We will go through these aspects, and tomorrow other general matters and some other important points we will discuss. So this we have planned for today and tomorrow. So now I will go through first recovery policy. Important aspects only, not in detail in recovery policy. Whatever important for exam, that we will go through. And first one, regarding classification, all things I am not covering, only for OCC. Since some confusion will come in case of OCC, that too here regarding stock statements. OCC. Normally more than 90 days overdue, it is we call as NPA. Agriculture was saying what is one crop season or two crop seasons. These are all old norms. Regarding OCC, regarding submission of stock statement, as per our guidelines, drawing power you are arriving and permitting drawings against stock statement of more than 3 months old is called as irregular. That means we can permit drawings up to 3 months from the date of stock statement. That is regular. Beyond 3 months, if you permit, that is irregular. So such irregularity continues for another 3 months, that is 90 days. Then it is called out of order. That means total 6 months non-submission of stock statements, the account will become NPA, out of order. This is about stock statement. And next one, regarding non-renewal, though limit may be within sanctioned, liability may be within sanctioned limits, or or there are no other irregularities in the account, but account is not renewed from the due date or from the date of extension, whatever it is, or extended due date. If it is not renewed within 180 days, then the account will become NPA. So these two are special for OD/OCC running accounts. Remaining all NPA classification as it is, we need not worry. Okay, next. Securities 50. Next, directly from standard to, it will go to doubtful assets or loss assets without going to other, because normally account has to go from standard to substandard, then doubtful, then loss assets. When it will go after 12 months in substandard, it will go to doubtful assets. First year doubtful, and second and third year doubtful we call D2, and then D3. That is more than 3 years. And afterwards it will go to loss assets when securities are less than 10%. This is our norm for classification. Suppose standard assets we have sanctioned, and securities whatever available normally at the time of sanction, subsequently securities are eroded by more than 50%, and available security is more than 10% of the liability. In such cases, from standard, straight away the account will go to doubtful assets without going to substandard. When there is erosion in value of security by more than 50% and available security is more than 10% of liability, in such cases, it will go to doubtful directly. If available security is less than 10%, then straight away it will be classified as loss asset. So this is straight away going from standard to either doubtful or loss asset. Now, regarding provisioning, there is question already, recalled question has come regarding doubtful provisioning. There is a question in 2 to 3. Provisioning. So first one is standard assets provisioning. In case of standard assets provisioning, it is normally 0.25% in case of agriculture and small and micro enterprises. Medium enterprises and all other advances, it is 0.4%. And 1% in case of your commercial real estate. And 2% in case of teaser housing loans. Teaser housing loans means during initial period, banks charge lower rate of interest to attract customers. Subsequently, they enhance rate of interest. So these accounts are called as teaser housing loans. Earlier, we used to give other banks, but Reserve Bank has objected subsequently and stopped such type of practice by banks. But still accounts are continuing for those accounts up to 1 year, from the date of upgradation of rate of interest. That means they might have given for lesser rate of interest. Subsequently, after RBI's instructions, they might have charged normal rate of interest. So from the date of upgradation of rate of interest up to 1 year, 2% rate of interest only. After 1 year, normal housing loan interest, that is provision, that is a 0.25% of provisioning will apply. So this is about teaser housing loans. And commercial real estate, it is 1%. CRE RH 0.75%. Now, restructured accounts. Restructured accounts attract 5% provision, standard assets. And assets restructured under COVID, that is during COVID period, it is attracting 10% provision. So these are provisions for standard assets. Now, substandard assets provisioning. Substandard assets provisioning 15% in case of secured substandard and 25% in case of unsecured substandard. This is provisioning for substandard. For doubtful assets, first year D1 we call, first 12 months in doubtful asset we call as D1. So during this period, provisioning is whatever shortfall in security is there, for that 100% provisioning, and security portion 25% provisioning. So realizable value of security for that 25% and shortfall in security 100%. In case of doubtful asset 2, DA2, in that case, 40% of realizable value of security and shortfall in security. More than 36 months, in such cases, Total it is 100%. There is no question of classification of secured or unsecured portion here. So now question, how they are asking is, an asset, a loan account has become doubtful asset 2 category, D2 category. That means it is more than 12 months in doubtful assets. And liability is 10 lakh rupees. Liability is 10 lakh rupees. Available security is 5 lakh rupees. So what is provisioning for this account? Like that they are asking in exam. Now liability is 10 lakh rupees, number one. Out of that, available security is 5 lakhs. So unsecured portion is 5 lakh rupees. So unsecured portion 5 lakh, it attracts 100%. That means for 5 lakhs, it is provision is 5 lakhs only. And for secured portion, 5 lakh rupees, since it is D2 more than 12 months, 40%. So 5 lakhs into 40%, it is 2 lakh rupees. Here comes 2 lakhs unsecured portion and 5 lakhs for unsecured portion total. 7 lakhs is provision for this account. Like that, they are asking in exam. Instead of asking percentage, they give simply, this is the liability, this is the security value, and what is provision for this? It is D2 category. Or simply they says, from the date of NPA, it is 24 months. Simply. So from the date of NPA 24 months means first 12 months it will be substandard assets and the next 12 months it is DA1. It is crossed already. So DA2 it is starting. Like that they will ask. Okay. Class assets it is 100% provisioning. Right. So this is about standard assets provisioning. Already we have discussed this. Now accelerated provisioning. This is another point here. Accelerated provisioning means here, suppose bank resort to evergreening of the account. What is this evergreening of account? Some NPA is there. To save that NPA, to account slipping to NPA, we sanction another fresh loan and adjust to this overdues so that account is safely it is coming out of NPA. It is not slipping to NPA. So you are sanctioning additional loan facility and adjusting to a loan account to prevent that account slipping from NPA. It is called as evergreening. Sanctioning additional facility and adjustment of loan so that the loan account will not become NPA. This is called evergreening. Or wherever we are supposed to report to CRILC, SMA2, etc., we are supposed to report to CRILC. So if you are not reporting to CRILC, in such cases also, it attracts additional provisioning here. So what is this additional provisioning here? It is called accelerated provisioning. This accelerated provisioning is in case of substandard, up to 6 months same, there will not be a change. So after 6 months, for unsecured, in case of it is 40%, and for secured, it is 25%. Otherwise, in normal case, secured 15% and unsecured 25%. Up to 6 months, same rate only. After 6 months, up to 1 year, accelerated provisioning may, secured is 25%, unsecured is 40%. This is about substandard accelerated provisioning. And doubtful one, secured itself is 40%. Suppose it is not accelerated, normal provisioning means 25% first year and DA2 it is 40%. So here directly it will be 40% in case of accelerated provisioning. And for unsecured portion, it is 100% as it is. So DA2 and 3. DA2 means above 1 year. Normally it is 40%. But here it is next slab, it is 100%. So accelerated provisioning for DA2 is 100%. And doubtful asset 1 is 40% for secured portion. Unsecured as it is 100% no change. So this is about accelerated provisioning. Right? Now, we are going for recovery policy. In recovery policy, all general aspects we will not touch. Only important one we will go through. Filing DRT. Now 20 lakhs and above, we can file in DRT. The olden days, it was 10 lakhs only. Legal method, non-legal method, recovery app, etc. Now, call center at Koramangala, Bangalore, that is National Games Village. they call persons with liability up to 1 crore for regularizing irregular portions, etc. And OTS borrowers also, for payment of OTS amount, they will call up to 1 crore rupees liability. Koramangala Games Village, they will take care. Right. Now, regarding SARFAESI, yes, portal. Yeah, before going for SARFAESI, one online OTS portal is there, Circular 247 by 2024. Regarding this online portal, directly customers can apply this e-OTS. For this, of course, two schemes are there. One is up to 25,000 and another one is above 25,000 up to 2 lakh rupees. For this, they can apply online, and upfront they have to pay 10% of the amount, and the remaining amount they can pay within 3 months in 3 equal installments. So this provision is there. After payment of this 10% amount, they will receive online, they can generate sanction letter also. And after complete payment, they will generate no due certificate also through online only. Here there is no manual intervention. It is online, end to end. Now regarding SARFAESI. Yes. SARFAESI, there are 2-3 questions in last exam. First one is eligibility. Eligibility they asked already in a recent exam. That eligibility means first one is NPA account, and liability 1 lakh rupees minimum. That is one class. And second one, minimum exposure should be 20% clause is there here. 20% clause means the available liability is less than 20% of total overdues dues. In such cases, it is not eligible. That means liability is more than 20% of total dues. For example, I will tell you, bank has sanctioned loan of 1 crore rupees and present liability is only 5 lakh rupees. That means it is 5% of total loan amount. But as per SARFAESI, below 20% if liability is there, it is not eligible. So this account where loan sanctioned is 1 crore, present liability is 5 lakhs, it is not eligible under SARFAESI, though the liability is above 1 lakh rupees. But here the clause is all the existing dues are less than 20% of total dues. It is not eligible. So for eligibility is minimum 1 lakh rupee, and second one, outstanding liability should be more than 20% of total dues. These two. And next one, ineligible accounts. Ineligible accounts almost less than 1 lakh liability, or your outstanding is less than 20 plus agricultural loans, number one. And apart from this, they have given some ships, aircrafts, etc. We need not worry about those things. And the next one is pledge and lien. Pledge and lien, these two are also not eligible. Pledge and lien. Because pledge means already securities are in our position. So there is no question of taking further provision. That is why pledge and lien also, it is general lien. So it is also not eligible. And now exempted. So this is one question. Now 13.2 notice here. 13.2 notice. Who has to give this 13.2 notice? Now recently 421/2024 circular has come. As per this circular, nodal officer is AGM or DM overseeing recovery and legal section at regional office. They are called as nodal officers, and that nodal officer is now responsible for starting from initiation of SARFAESI onwards up to giving letter to the purchaser, that is sale letter to the purchaser. Up to that point, all process is to be monitored and ensured by this nodal officer. So here, so first our guideline is that SARFAESI demand notice, 13.2 notice. This 13.2 notice, it should be issued by authorized officer. Now, nodal officer who is AGM or DM of RO, is authorized officer. So within 3 days, our guidelines are that within 3 days of account becoming NPA, we have to issue 13(2) notice, that is SARFAESI notice to the borrower, guarantor, and mortgagors. This is to be issued within 3 days. This is our internal guideline. Right? Next. So in 13(2) notice, we have to mention clearly that party has to clear the dues within 60 days. It is as per SARFAESI Act. And we have to mention your SARFAESI ID also compulsorily in SARFAESI notice. Nowadays, this SARFAESI notice and position notice all are generated in our shuffle package. That is our security. The SARFAESI shuffle package is there. In that package, it will be generated. But SARFAESI ID is compulsory. That is another one. And nodal officer has to ensure that within 7 days, the demand notice is served to all, that is borrower, guarantor, and mortgager. Within 7 days, he has to ensure that notice is to be served. That means within 3 days, notice to be issued, and within 7 days, ensure that notice is served to all people. Suppose if notice is not received by anybody, they are rejecting. In such cases, first one, we have to publish that in 2 newspapers. First one is affixing on the door of the party, and second one, notice is to be published in 2 newspapers. One is in vernacular and another one is English paper, whatever it is. Right? This is about. Next one, serving of notice. Here also guidelines regarding serving of notice, also demand notice. So what are the modes? This is also one recalled question. One is hand delivery against acknowledgement. Second one is registered post, acknowledgement due. Third one is speed post. And fourth one is courier or fax message or email also. But in case of email or fax, confirmatory copy, it shall be sent through registered post. Right? This is about 13(2) notice. And next one, for issuing 13(2) notice, in case of consortium, there is no requirement of consortium 60% norm. What is the 60% norm? In case of consortium, for taking any decision, 60% of members in value, normally 75% in number, 60% in value. They have to agree. But now 75% number is nikal diya. Now 60% is applicable. So it is mandatory requirement of 60% of consensus in case of consortium only for 13(4) notice, that is for position notice. And for issuing your 13(2) notice, that is SARFAESI notice, that 60% norm is not applicable. Right? So this is about serving of 13(2) notice. Another one, in 13(2) notice, whatever liability we are mentioning, it should coincide with the liability mentioned in DRT's IOA also, original application in DRT. Because as per Banker's Book of Evidence Act, court will consider whatever liability we are mentioning as correct one. If there is any difference in 13(2) notice and also DRT OA, it will affect our recovery process. So at any cost, it should be same liability, number one. And number two, if any complication is there, SARFAESI notice can be vetted by our panel advocate. But panel advocate should not issue SARFAESI notice. Only authorized officer has to issue SARFAESI notice. Under no circumstances, panel advocate shall issue SARFAESI notice. Right? This is about SARFAESI notice, demand notice. And immediately after receiving demand notice, party may raise objection. So whatever objection is raised by party, it has to be redressed, that is replied within 15 days. This is another one. So here also, nodal officer has to ensure that within 15 days, reply is given to objections, given for objections. Next, recourses all, whatever we can take over management, etc., etc. For exam, we are not that much concentrating after 60 days. Next, position of movable property. So, while taking position of movable property, 2 witnesses we have to take. Panchanama we have to prepare. 2 witnesses we have to take, and we have to serve the notice to the borrower, mortgager, and also guarantor and with acknowledgement. If they are not receiving, again same process, we have to send. And this position notice is to be published in 2 newspapers. This is also another now. Immediately after taking position, within 3 days, we have to publish in, and also we should fix the reserve price also. Within 3 days, we should fix the reserve price. This is about 13.4 position notice. And for consortium, 13.4 notice, 60% consensus is required. Right? And in case of doubtful and loss assets, if liability is exceeding 50 lakh rupees, for taking position, we may take the assistance of resolution agents also. And charges are there for resolution agents. Now, nodal officer, he has to ensure that resolution agent services are availed in case of need. Next, if borrower is not cooperative, in such case, what we have to do for taking position? We have to approach DM or CAM or CJM court. And for this court also, we may take assistance of resolution agents if it is more than 50 lakh rupees. So fixation of reserve price within 3 working days, we have to do. This is as per latest circular 421/2024. Section 14, DM is bound to take position of assets, any documents and within period of 30 days. Okay. Position DR. Next, regarding tenanted properties, this is also another recalled question. There are 3 incidents where regarding tenanted properties. One is already tenant is there before our loan itself. That is, before giving a security, tenant is already available prior to mortgage here. First case. In such cases, suppose if tenancy agreement is contrary to the provisions of Transfer of Property Act, then they can be evicted. Otherwise, we have to take assistance of court. If it is prior and tenant is inducted after mortgage, in such cases, assistance of court we have to take. And if tenant is inducted into the property after serving demand notice, it can be evicted. So in first 2 instances, first one compulsory court, that is prior to mortgage, compulsory through court. Second one, after mortgage, tenancy is given. In such case, if there is any contrary to the Transfer of Property Act, then we can approach the court. Otherwise, we can evict. Third one, directly he can be evicted. But as per newly introduced section, only DRTs are having jurisdiction for deciding about tenancy. This is another one. So recalled question, tenancy, regarding tenancy. Next, after taking position, it is common within 7 days, we have to publish in 2 leading newspapers. That is position notice. And we should fix reserve price. Nodal officer has to ensure that within 3 days, reserve price is to be fixed. Next. And regarding valuation, 5 crores and above, security 5 crores and above, to empaneled valuers. It is also common guideline. Next, this is another recent recalled question. Next one. In respect of securities of immovable properties, which were valued at more than 2 crore at the time of sanction or renewal, and reduction in the present value is more than 30%, in such cases, 2 valuation reports are to be obtained before placing to the competent authority for fixing reserve price. If there is any variation more than 30%, at the time of sanction, we will be taking valuation, and now also we are taking valuation at the time of going for auction. So if variation is more than 30%, then we have to take 2 valuation reports for fixing reserve price. This is recent recalled question. Normally, valuation certificate should not be more than 1 year old. And if it is more than 1 year, we have to get for fresh valuation. Right? Next, this is another. If variation in realizable value between new and immediate previous valuation is more than 20%, then reserve price will be fixed by next higher authority. If the variation in realizable value between immediate previous valuation and present valuation, if it is more than 20%, then reserve price will be fixed by next higher authority. Next, who will fix the reserve price? This is an. In the first instance, Suppose it is branch powers, then RO will fix. RO powers also RO will fix. Branches under CO, then next higher authority at CO will fix. And CO or RO power accounts, respected sanctioning authority. And HO power accounts, CGM or GM HO CSC. So they are the authorities for fixing reserve price. Branches aito RO, RO powers RO only, CO powers CO will fix. HO power accounts GM HO CSC. And same authority, they can reduce reserve price. Suppose first instance sale is not taken place, we have to reduce reserve price. 10% first instance they have reduced, same authority can do. Second time, another 10% reduction, same authority can do. So, reserve price fixing concerned authority, they can do reduction up to 20% and at a time maximum 10%. This is recent recalled question again. Concerned sanctioning authority, they can reduce reserve price up to 20% maximum and at a time maximum 10%. And beyond 20%, next higher authority will fix the reserve price. Beyond 20% reduction, next higher authority will fix. Total reduction up to 30%. And reduction more than 30%, GM HO CSC, GM or CGM HO CSC, HO CSC CGM is having full powers to fix. So either more than 30% or beyond that, HO GM only will fix the reserve price. So here one question already it has come, up to 20% reduction concerned sanctioning authority. Now for you it is more than 20%, who will fix the reserve price? Next higher authority. More than 30% HOGM. So 2 points for your current exam. Next one, regarding sale notice. So wherever redemption notice is applicable, in some states before sale redemption notice is to be issued. In such cases only it is applicable. We have to serve 30 days redemption notice, and after completion of the 30 days only we should go for sale notice. That is only in particular states, not in all states. So now authorized officer, he has to serve 30 days sale notice to the borrower, guarantor, mortgager. Right? Here also nodal officer, that is AGM or GM of R&L section RO, they ensured that sale date should be fixed at least the gap of 36 days. Why 30 days? 36 days? 30 days is sale notice period, and for 6 days to receive letters by borrower, guarantor or mortgager. So 6 days time is given for them to receive. Hence total 36 days gap they have to give in the notice, so that 30 clear days is available for borrowers. Right? Next, authorized officer by sell. One is obtaining quotations by inviting tenders. These are all common guidelines. Private treaty. So now sale by private treaty. As per Ministry of Finance guidelines, in case of sale by private treaty, for a property with assessed value or reserve price up to 100 lakhs, at least one attempt you should make through public auction. If no bidders are there for your first attempt in public auction, then you may go for sale by private treaty up to 100 lakhs rupees reserve price only. If it is beyond 100 lakhs, in such cases, 2 attempts you have to make in public auction. If both attempts are failed, then only you may go for private treaty. Now, if authorized officer fails to sell the property after complaining in any of the methods, that is, or whatever methods, auction, etc., it is there. If sale could not be take place, in such cases, again we should go for sale. So going for sale again, notice is to be served to the borrower and mortgager. So here how many days notice? If same terms and conditions are there, no terms and conditions are altered, modified, in such cases 15 days notice is sufficient. Again, second time sale notice. If any terms and conditions including reserve price altered, changed, in such cases, and again 30 days sale notice is required. So original sale notice is 30 days compulsory. If no sale is taken place, again we are going for next second sale, second time. In such cases, 15 days notice is sufficient if no terms and conditions are altered. If there is any change in terms and conditions, then 30 days notice again it is required. Next, depositing the amount immediately after confirmation. So whoever successful bidder is there, they have to deposit 25% of the sale price immediately or at least next working day, 25%. And the remaining 75%, they have to pay within 15 days normally. And CO can permit maximum 3 months time for payment of this. So this is payment time. Valuation. After sale, still liability is left over, then we will go for court. There is no other option here. Next, borrower, they are having right to file appeal in DRT against our SARFAESI position notice, 13-4 notice. They may go and approach DRT for within 45 days from the date of position notice. They are having right. In such cases, suppose DRTs, if they are giving any instruction, then only we can stop. Otherwise, we can proceed continuously. So against orders of DRT, if banker or borrower wants to approach DRAT, in such cases, 30 days time is there. So within 30 days, we can approach, suppose it is against our bank, against bankers, or borrower may approach DRAT, but for approaching DRAT, normally they have to pay 50% of the amount, claim amount they have to pay, and DRAT may reduce it to by another 20%, may reduce to 25%, right? Normally DRT, it has to dispose within 60 days and it can be extended to 4 months. Regarding SARFAESI, now there is no question of 1 month, etc. Immediately after creation of our charge, we should file with the SARFAESI compulsory. Next here, what are all the charges we can create with the SARFAESI registration, immovable property, etc., etc. Last one I will go through, remaining all general only. Under construction, residential or commercial building. If any apartment is under construction, then how to create charge with SARFAESI? There will be agreement with the seller, that is builder. Basing on that agreement, we can file charge with SARFAESI. Okay, now SARFAESI seizure agents, etc., etc. In exam, it is not touched. That is why we are not going that much in exam. Whatever points, wherever they have touched in exam, those points only I am concentrating. Remaining all, yes. Next, for step-up incentive in case of SARFAESI agents, step-up incentive. Who brings a successful bidder? Original charges are there that I have not discussed. Only step-up incentive I am discussing. Who brings a successful bidder? Generally, 1% of realized value of the property with minimum 10,000 and maximum 3 lakh rupees, it will be paid. Apart from that, if the SARFAESI agents, if they bring successful bidder for 2 properties in a same month, calendar month, then 10% of the above eligible. This is 1% with maximum 3 lakhs. So in that 10%, they will get additional, it is called step-up incentive. If they bring bidders for 3 properties in a calendar month, 15% of the above amount they will get additionally. If they bring 4 properties, bidders for 4 properties in a calendar month, then 20% of the above amount they will get. Maximum 4 properties only, they are eligible. This is step up for SARFAESI agents. This is not required. NPA. Now we will discuss about our willful defaulters. Willful defaulters. Yeah. Now we'll come to this. So there are 4 definitions are there for classifying a person as willful defaulter. First one, the unit is generating sufficient income or the party is having sufficient means to repay, but party is not repaying. This is number 1. Number 2, we have sanctioned loan for a specific purpose and that yes, party has diverted it for other purpose. It is called diversion of funds. We sanctioned working capital loan and party has utilized it for some term loan purpose, component, etc. That is diversion of funds. And third one is siphoning off of funds. That means whatever loan is sanctioned, party has not utilized it for that purpose, and funds he has taken to some other purpose, not related to the business. This is third one. It is called siphoning off of funds. And fourth one is disposed or removed movable fixed assets which he has given a security. Party has disposed without our consent or knowledge, and funds not brought into the system. This is fourth one. And one more point last year added for willful defaulters, that is fraud angle is also reported. In such case also we can see willful angle, willful default angle. So total 5 types of definitions. Suppose if party meets any of these 5 points, then he can be declared as willful defaulter. This is next one. Now definitions, they are asking what is diversion of funds. Diversion of funds, because in willful angle, second one is diversion of funds, third one is siphoning of funds, fourth one is disposing of assets without our consent, fifth one is fraud angle. So second one, diversion of funds, means utilization of short-term working capital for long-term purposes. Here options 1, 2, 3, 4 options, they may ask odd man out. That is why we are going through all options. Second one, activities or creation of assets other than those for which the loan was sanctioned. That means we are sanctioned for some purpose. Party has created asset not related to this. And transferring funds to the subsidiaries or group companies or other corporates. Routing funds through any other bank other than members of consortium or who has lent. And investment in other companies by way of acquiring equities, etc., etc. Here, in case of diversion, funds are available in the system, but not utilized for the purpose for which we have sanctioned. This is called diversion. Ultimately, funds are available in the business in some or other form, but not utilized for that purpose. That is why the account has become NPA, number 1. Number 2, what is siphoning of funds? This is also another recalled question earlier. Siphoning of funds means utilized for purpose unrelated to the operations of the borrower. That means he has taken business loan and purchased a car for personal use, like that. Siphoning of funds. That means funds went out of the system. This is called siphoning off. So definition of one is diversion, second one is siphoning off. Next, initiation of willful default. Who will do here? Suppose once your account is becoming NPA due to non-payment, any of these 4 reasons we have to identify. How it is to be identified? Within 90 days from the date of classification of the account as NPA, or within 30 days from the date of submission of investigation report, whichever is earlier, it is to be decided whether willful angle is there or not. This is also another recalled question. Willful angle is to be decided. Steps we have to take within 90 days from the date of classifying the account as NPA, or within 30 days from the date of submission of report. And now 2 committees are there for deciding as willful default. First one is identification committee at head office. Second one is grievance redressal committee. Second one. So 2 committees are there. These 2 committees, recently RBI has clarified that we have to serve 21 days notice to the borrower. It is called so-called notice. So identification committee, first committee is identification committee. This identification committee has to serve 21 days notice to the borrower to informing them why we should not declare you as a willful defaulter. 21 days. So identification committee has identified, party has replied and not satisfied, identifies as willful defaulter, and then confirmation by grievance redressal committee, that is next higher level committee. And this grievance redressal committee, again they will ask the party to submit, and within 15 days time, second time it will give. And personally also party may appear. In such cases, if grievance redressal committee is not satisfied, then they will be declared as a willful defaulter. So here 2 times party will be given time. One is first one, show cause notice 21 days, that is by identification committee. And second one, grievance redressal committee, that is confirmation committee, second one. they will give 15 days notice second time. 2 times party will get notice. Right? Then grievance redressal committee has confirmed a party as willful defaulter. Now, what are the punishments for willful defaulter? First one, 1 year they are barred from availing any finance for extension or expansion of the unit number 1. Second one, for 5 years they are barred from availing finance from any of the financial institutions. Once the person has declared as willful defaulter, for 5 years they cannot avail loan from any financial institution from the date of removing their name from list of willful defaulters. Willful defaulters list, when it is when we will remove, when party has complied with all our terms and conditions, when diverted funds or siphoned of funds, it has come to system again, brought back to the system, and now following guidelines, then we will remove their name from willful defaulters list. From that date onwards, for 5 years they are barred from availing finance for fresh loans, and for expansion 1 year. So this you have to mind. Expansion, so far they have not asked. 5 years frequently they are asking in exam. Okay. So this is about willful defaulters. Now again, complaining to willful defaulters, against willful, we can proceed criminal proceedings also against the party. For that, grievance redressal committee, it will initiate. So here committees also it is mentioned, up to 25 lakhs one committee, GM headed committee, and above 25 up to 25 crores CGM of CAMWing is chairman, above 25 crores ED is chairman for that committee. It is identification committee. Next, review committee or grievance redressal committee, second one, up to 25 crores saito ED is chairman, and above 25 crores MD and CEO is chairman for this committee. Right? Now show cause notice, first 21 days, second one 15 days. Now, regarding filing complaint with police or CBI, borrowers classified as willful defaulters by grievance redressal committee with liability 25 lakhs and above up to 3 crores. So here, as per Vigilance Commission recommendations, the minimum cutoff amount for declaring a party as willful defaulter is 25 lakhs. This is minimum amount. Below 25 lakhs, you should not declare as willful defaulter. Earlier, even 10 lakhs also was there. Now, it is 25 lakhs. This is as per recommendations of Vigilance Commission. So, above 25 lakhs and above, up to 3 crore rupees, state CID, we have to report. And liability 3 crores and above, up to 25 crores, CBI Economic Offences Wing. And above 25 crores, CBI Bank Securities and Fraud Cell. Above 50 crores, CBI Headquarters, New Delhi. This is how we report regarding CBI. And don't get confusion regarding CBI reporting. For fraud, it is 6 crores is cutoff point for reporting to CBI. Whereas for willful defaulters, it is 3 crores cutoff for reporting to CBI. Willful defaulter है तो 3 crore and उससे ज़्यादा we will report to CBI. In case of fraud, 6 crores and above we will report to CBI. Up to 6 crores for frauds only, state CID only. This is the difference between willful default and fraud angles. So don't get confusion. It's only for information purpose. Now, prior to lodging complaints before CBI, in case of head office, vigilance wing, they will vet that our whatever we are giving complaint is to be vetted by vigilance wing in case of HO. In case of circle filing, then R&L section of circle, they have to vet our complaint. Publication of photographs, earlier it was 10 lakhs cutoff limit, now it is 25 lakhs. Remaining all common guidelines, we will not waste time on this publication. Next, compromise guidelines. Compromise guidelines, old one only. And moreover, it is not appeared in last 3 exams. So we are not wasting time on this. We will go for further. Next, committees for considering OTS at head office. First one is recovery committee consisting of 8 wing heads. Here, Earlier it was 5 wing heads only. Now it is changed to 8 wings heads. So current year change. This one. And the quorum is 3 GMs plus head of RLFP or SAM wing. So total it will become 4 quorum recovery committee. So all proposals, either compromise or write-off or waiver of unapplied interest, etc., whatever HO proposals regarding NPAs, it has to be routed through this recovery committee only, 8 GMs committee, right? Next one. Advisory committee, this is recalled question earlier, 3 to 4, recalled question. Advisory committee, it consists total 5 members. Out of that, 2 are retired High Court judges and 2 are retired bankers, not below the rank of ED, and 1 is external agencies person. Total 5 persons will be there. Minimum quorum is 2 persons. Out of 1 High Court judge is also compulsory. So what is this advisory committee will do? Any sacrifice by bank 1 crore and above, all such proposals are to be routed through this advisory committee. And this committee's recommendations are advisory only. It is not mandatory. That means we need not compulsorily follow whatever they give. It is only advisory committee. So any sacrifice 1 crore and above, it has to be routed through advisory committee. Right? This is about advisory committee. Delegated powers. Next one is non-cooperative borrower. Earlier we have seen willful defaulters. So for classifying a person as willful defaulter, non-cooperative borrower, similar procedure, but cutoff point is separate. To declare a person as non-cooperative borrower, 5 crores minimum is liability. 5 crores. Willful defaulters, 25 lakhs. For non-cooperative borrowers, 5 crores is minimum amount. Whom we declare as non-cooperative borrowers, is deliberately stonewalls legitimate efforts of lenders. That means our efforts, inspection of securities, party is not allowing, and the sale of assets through SARFAESI, party is not allowing, obstructing. For such people, we can classify as non-cooperative borrowers. If it is a company, then directors we declare main persons. Or if it is a business enterprise, other than companies and the persons who are important, that is who are running the business, main persons, then we will declare as willful non-cooperative borrowers. And regarding non-cooperative borrowers, we have to report to CRILC every quarter within 21 days from the close of every quarter. And declaring them as non-cooperative borrower, I told you one is identification committee. They have to give 15 days time. Here only 15 days time only given. Whereas willful defaulters 21 days time is given. And again, first one is identification committee. Next one is confirming committee or grievance redressal committee. They will declare as willful defaulter. Then what is the punishment for willful defaulters? Any new loan sanctioned to non-cooperative borrowers, it will attract higher provisioning. That is, standard asset will attract substandard asset provisioning. This is for punishment for non-cooperative borrowers. Right? So only here cutoff point. Legal notice we can issue circular HO. That is another one. Lok Adalat is only cutoff points. 20 lakhs. Lok Adalat cutoff points. Maximum amount is 20 lakhs. And permanent Lok Adalats up to 1 crore we can file. Here they are formed under Legal Services Authority Act 1987. Lok Adalat. And in Lok Adalat generally it is consent decree we call, because there will be conciliation meeting between party and banker, and ultimately they will arrive at a consensus. So it is called as consent decree. Since it is a consent decree, there is no appeal against this Lok Adalat ka award. This is briefly, and a time up to 3 years time may be permitted by Lok Adalat judge for payment of agreed amount. Maximum up to 3 years they can give time. Right of recompense. This is last recalled question also. Even our restructuring also I will discuss this point. Right of recompense means we will be sacrificing some amount during restructuring process, rehabilitation process. How it will, that I will discuss in our restructuring. So whatever amount we are sacrificing, that amount we can recover. We are having right to recover once the unit is running in profits. That right of banker to recover sacrificed amount is called as right of recompense. That again I will discuss in detail. Next, charging interest on compromise amount. This is another one. Compromise amount, normally party has to pay immediately. 10 to 15% upfront normally we will ask party to pay, and remaining amount we say within 3 months they have to pay. And RO or branch power up to 3 months permission will be there. CO up to 6 months. Beyond 6 months up to 18 months HO powers. And if they are not paying agreed OTS amount as per agreement date, and any extension is permitted, in such cases, we will charge interest. What is the rate of interest on compromise amount? 1 year MCLR plus 1.5% simple from the date of communicating orders of acceptance to the party till date of payment. This is also one recalled question. What is the rate of interest chargeable on OTS amount? So it is 1 year MCLR as on 1/4/2024 plus 1.5% simple interest from the date of communicating orders till payment. Normally, for accepting OTS, the amounts as per RBI guidelines, whatever OTS amount you are accepting, it should not be less than net present value of the estimated cash flows. That means there will be assets. If we can sell the assets and we can release, that is what estimated cash flows. That you have to calculate as on today. Suppose it may take 2 to 3 years for sale and getting that amount. After 2-3 years, you may receive some 1 crore rupees. So after 3 years, 1 crore, what will be today its value? It may be 85 lakhs or 90 lakhs. That is called net present value. So your compromise amount should not be less than net present value of anticipated cash flows, estimated cash flows. This is RBI guideline. And now this is again recent recalled question for 2 to 3. They asked one point in this. For calculation of net present value, what is the period we will consider? Net present value period. What is the period we will consider for calculation of NPV? SARFAESI action. In SARFAESI action, where physical position is taken, 1 year we will take. Where physical position is not taken, 2 years we will take for calculation of net present value. And where in case of DRT cases, where case is not filed, then 4 years we will take. And where decree is pending, 3 years we will take. This is recalled question recently for 2 to 3. They asked. In case of while calculating net present value for OTS amount, where cases are filed and decree is pending and recovery certificate is yet to be issued, what is the time period we will consider for calculation of NPV? 3 years time period we will calculate. That means we will receive funds after 3 years. After 3 years, we will receive some lump sum. Today, what will be its value? This is what net present value. So 3 years period in case of DRT, where decree is pending. And RC is already issued. EP we have to file. In such cases, 2 years. In case of civil courts, where recovery suit is not filed, 5 years. Where suit is pending and yet to be decreed, 4 years. Where decreed and EP is pending, 2 years. In case of NCLT, from the date of appeal, 2 years. And where party has approached NCLAT, appellate authority, in such case, 3 years. So these are the periodicity you have to keep in mind. Since they asked already recent exam, this you should be thoroughly. Of course, this appropriation of your recoveries, mostly they are at lower level, they will say. In case of recovery, OTS, if it is in OTS or NCLT, first you adjust to principal, then to charges, then to interest. If party is directly paying without OTS, etc., in such cases, normally we adjust first to charges, then to interest, and then to principal. This is how we will appropriate recoveries. Next, this is also recalled question recently. Write-off, technical write-off or prudential write-off. Actually, the definition of technical write-off or prudential write-off is that the loan may be outstanding in branches, but at head office level, it is written off because 100% provision is already made. Why we are making 100% provision? It is again for income tax purpose. Wherever some cases RBI is permitting, in such cases we can go for 100%, making 100% provision. And those accounts, it will be written off at head office level, but account will be existing in branch level. They are called technical write-off or prudential written off. Right? Next, accounts recommended for writing off, they should have completed 5 years or more from the date of advance. That means loan at least 5 years back it is sanctioned, given, disbursed, and continuing as NPA for 3 years. 3 years is NPA and classified as loss asset as 31st March of preceding year. Then we can recommend for writing off. So 3 conditions here. First one is loan age, total age of the loan is 5 years completed. Second one, NPA age 3 years completed. Third one, previous 31st March, it is loss asset. In such cases, the account can be recommended for writing off. This is recalled question recently. This is our writing off powers. We need not worry. Next, transfer of loans. What is this transfer of loans? Purchasing of loans or selling of loans. This is what transfer of loans. So here, purchase of loans are economic interest by our bank. What are all the loans we can purchase up to moderate risk? Because up to moderate risk we consider as investment grade. So up to moderate risk we can purchase loans or BBB and above rated loans only. And standard assets not appeared in SMA 1 during last 1 year. They are eligible for purchasing. So this is transfer of loans. We call as, if you sell, it is called securitization. Right? Minimum quantum is 10 crores. In case of individual loan purchases, minimum loan quantum is 10 crores. So these are the conditions for purchase of loans or economic interest by our bank. One is moderate risk, BBB and above rated. Second one, it is standard assets. And third one, not appeared in SMA during last 1 year. And the minimum quantum in case of individual loans is 10 crores. These are conditions for purchase of loans. So minimum purchase consideration. What is the minimum purchase consideration in case of purchase of individual loan accounts? The minimum purchase consideration is future cash flows associated with the loan can be discounted at present interest rate being charged on the loan minus up to 2%. So whatever present loan is being charged on that minus 2%, this is the discount rate. That means we purchase for that rate and we will get margin of 2%. So what is the use of purchasing? That margin 2% we will get. Next, sale. For sale also similar. Here, future cash flows of charge plus 2% here. This is sale. We are adding for discount. That means, suppose if you are charging 10%, you are selling loan. Here, for discount, you are adding 2%, means total 12% discount we can send. So other bank which is purchasing the 2% is margin for them. This is how banks purchase and sale takes place between banks and financial institutions. After security and after SARFAESI Act, this has become common. Right? Now, conditions, sale of loans by our bank. What are the conditions here? Residual maturity more than 5 years. That is one. And OD, OCC, they are not eligible for pool of loans. For sale of pool of loans, maximum retention of 25% of economic interest of pool. Economic interest of pool. That means total pool, just like NBFCs, I think I told at the time of CRM policy, NBFCs, while tie up with NBFCs, will be sanctioning loans. In such case, first NBFC will do entire process. That means they identify borrower, they take documentation, they disburse loan, and after disbursing, they bundle and transfer 80% of that loan to us through assignment, and 20% they will retain. So similarly, here also 25% we will retain minimum retention and 75% we can sell to other banks. This is sale of loans by our bank to other banks. So here retention is 25%. In case of NBFCs, they have to retain 20%. Here, maximum we can retain 25% here. Right? So minimum holding period in books of transfer, okay, this is not required. Who issues here? Next, regarding transfer of stressed loans, SMA and NPA, transfer to other banks or ARCs. That is nothing but sale of NPAs to other banks or ARCs, asset reconstruction companies. So in this case, transfer of loans to ARAs, what are all the eligible accounts for transferring to ARCs, for selling to ARCs? Here, stressed loans which are in default for more than 60 days are classified as NPA for more than 1 year. They are permitted to be transferred to ARCs. If it is NPA, minimum 1 year it should be with us as NPA. If it is a stressed loan, SMA2, more than 60 days means SMA2. That means standard assets with SMA2 are eligible. NPS with 1 year existing with us, they are eligible for sale to ARCs. This is for sale to ARCs, right? And e-auction is conducted under SARFAESI at least once in eligible accounts. Where recovery prospects are not too good, also in line with consortium or MBA. That means in consortium or MBA, other members also selling. So we will also sell. Normally, selling along with in consortium or MBA, stressed assets more than 60 days, generally more it will be taking place, right? NPS, as it is 1 year. So conditions here for sale to other banks, sale of assets means our loans to other banks, 4 conditions you have to keep in mind, because in multiple options, they may ask, what are all the loans eligible for sale to or transfer to ARCs? Number 1, standard assets, stressed loans, SMA2. That is more than 60 days overdue means SMA2. Standard assets, SMA2. Number 2, NPS with minimum 1 year outstanding with us as NPA. Number 2. Number 3, e-auction is conducted under SARFAESI at least once and auction is failed. Number 4, where recovery prospects are not too good. Number 5, along with other MBA or consortium members, we will sell. So these are the conditions for selling to ARCs. Next, in case of SMA accounts, early signs of stress, SMA2 accounts already we discussed. Transfer to other than ARCs, that means maybe for other banks or NBFCs, if you want to transfer or sell. Transfer means a part also you can transfer. Selling means completely we can sell. So other than ARCs, in such cases, identification committee, wing heads of RLF wing, RM wing, FM wing, SAM wing, etc., etc. Okay. So here delegation up to 25 crores, CACR board will take decision. Above 25 crores, MC of the board. Next, unapplied interest calculation. This is also recalled question. Unapplied interest calculation. Substandard assets, 1 year MCLR plus 1.25%. MCLR as an 1 fund. Why we calculate unapplied interest? For arrival of delegation of powers. Suppose you are going for one OTS proposal. OTS proposal, NPA, it has become 2 years back, NPA it has become. So system will not debit interest for this 2 years period. So you have to calculate unapplied interest. If it is a substandard asset, 1 year MCLR plus 1.25%. If it is a doubtful asset, 1 year MCLR minus 1.5%. If it is a loss asset, 1 year MCLR minus 3.5%, or contractual rate, whichever is lower. These are the calculation of unapplied interest for our internal purpose, delegation purpose only. Normally, sale of assets to ARCs, asset reconstruction companies, for selling our loan assets to ARCs, it should be either cash basis or security receipts basis, but on both also. But minimum 15% of sale consideration should be in the form of cash only. Recently, Reserve Bank also reiterated this point. While selling assets to ARCs, minimum 15% of sale consideration you have to receive in the form of cash. Remaining 85%, whatever is there, that will be through securitized receipts or pass-through certificates. These securitized receipts or pass-through certificates, nothing but bonds only. Bonds only. They are issued by ARCs to banks, and it should be redeemed within 5 years or extended period of 8 years. Otherwise, they are treated as loss assets. Now, small example I will tell you to understand, because this transfer of assets, it is important for 4 to 5 level. Suppose you are having 100 crores NPA. Securities are there to the extent of 80 crores or 75 crores. 100 crores is NPA. You want to sell it to ARC. So one ARC will come forward for purchasing it for 60 crores. Let us assume 60 crores. So what is the norm? 15% they have to pay upfront. That means out of 60 crores sale consideration, 15%, that means 9 crores, they have to pay us immediately. That is what cash payment, 9 crores. Remaining 51 crores, they will issue pass-through certificates. That means, for example, each bond 1 crore, like that they issue 51 bonds. Who will subscribe for these bonds? Again, we also may subscribe, or LIC, other mutual funds, or individuals also now permitted. Earlier, individuals were not permitted. Now they are permitted. So 51 crores, each bond is 1 crore, 51 crores bonds. Some 51 people they have subscribed, and that amount they will transfer to us. Suppose we also purchased some bonds. In such cases, those bonds we have to redeem within 5 years, and our extended period maximum 8 years. Otherwise, those bonds are to be treated as loss asset in our books. This is what about securitized receipts. Next, whenever we are transferring stressed loan, no fresh exposure shall be taken on borrower till 24 months from the date of such transfer. Suppose some party's loan we are transferring to ARC. For that party, we should not sanction loan for another 24 months. And after 24 months, GMHO they are delegated to sanction. And the transfer should not acquire. Suppose we sold some loan account to ARC. Again, we should not buy that account back. It can be sold to some other bank or ARC, no issue. Next, what is Swiss challenge method? Because RBI says while selling assets, normally we have to follow Swiss challenge method. We're selling to assets to ARCs, etc. Earlier example, I will tell you to understand this Swiss challenge method. Earlier example, 100 crores is our liability, 60 crores is security, 75 crores is security. And somebody has come and submitted as bid for 60 crores. Somebody has submitted bid for 60 crores. That is called base bid. Base bid. What we do, we add 5% markup. So 60% to 5%, 5% means 3 crores. For 63 crores, again we will go and offer, if anybody is ready to take for 63 crores with markup 5%. If somebody is coming for 63 crores, we will give this loan to that 63 crores person. That is called winning bid. If nobody is coming forward, then 60 crores, whoever applied, first person, that is base bid, we will give it to him. This is called Swiss challenge method. Base bid, markup 5%, and winning bid, 3 types, right? Now, lookout circular. Lookout circular, just like after you can take the example of Vijay Mallya or Nirav Modi, they left the country. So to prevent such recurring by some other borrowers, this lookout circular we can issue, but MD is having powers to request concerned ministry for issuing lookout circulars. But here eligibility, first one, eligibility here 10 crores liability if fraud is reported. And if fraud is not reported, 50 crores minimum the liability. In such case, we can ask for issuing lookout circular. So first one is cutoff point. Fraud reported means 10 crores. Not fraud reported, other than fraud means 50 crores is cutoff point. And LOC is valid for 1 year. Again, it can be renewed also. Next, to whom we will ask willful defaulters, non-cooperative borrowers, red flagged accounts, early warning signals, etc., etc. MD and CEO, he will request to issue LOC to Ministry of Home Affairs. And then nodal section of Ministry of Home Affairs, they will require Bureau of Immigration to issue LOC. This is about LOC. Recovery agents policy, of course, they have not touched this. That is why we are not wasting time on this recovery agents policy. We are simply going others. Recovery agents. Recovery agents, again, one normal schedule. Step-up fees is also there. Step-up fees, fee schedule, new point here. Step-up fees may be paid as follows in case of resolution or recovery is done within a time frame of 3 to 6 months. So here, this is what step-up fees. Fees as per normal schedule, it will be paid up to 5 borrowers. In respect of assignment for recovery beyond 5 borrowers, what is the fee payable? Up to 5 borrowers, normal fees. 5 to 10, additional 5% fees we will pay. And 10 to 15 borrowers, additional 10% we will pay. So if it is recovery within 3 to 6 months, we will pay additional amount. It is called step-up fees. It is the latest addition. Right. This is our old one. Resolution agents. ERM branches not touched in exam. Detective agencies. Here again, book liability eligibility 50 lakhs and above eligibility. Individuals we will not engage, only firms only we will engage as detective agency. More than 50 lakh book liability. Normally they have to submit report within 60 days. What these detective agencies will do? Identification of borrowers, absconding borrowers, number one. And number two, identification of properties which are not in our record. That means they have not given a security to us. We don't have records. And such properties of borrowers, they will identify. That is second one. Missing persons, locating properties, and any other information. 3 types. The next, purchase of non-banking assets under SARFAESI. Suppose we went for auction in SARFAESI, no bidders has come. In such cases, for reserve price, we can purchase that asset. And again, we have to sell that asset within 7 years. Again, here comes as per section 9 of Banking Regulation Act. We are not supposed to keep any immovable property more than 7 years if it is not for own use. Any immovable property, if it is not for own use, we should not keep it in our name for more than 7 years. That is as per BR Act section 9. And RBI may extend another 5 years. So whenever we are purchasing any fixed asset under SARFAESI, if we are not using for own use, then again we have to sell in public auction, etc. Right? This is about purchase of non-banking assets. What is the minimum amount here we can purchase? So here minimum 10 lakhs and above we can purchase assets. And delegation of powers up to 200 lakhs GMCO CAC they can, and up to 250 lakhs CGM CO CAC, beyond 250 lakhs by HO authorities, they are having delegation of powers to. Now regarding recovery policy, we will go for one-time settlements. Afterwards, we will go for restructuring policy. Up to that, we will cover today. One-time settlements are there. Yeah, 1 minute here. Jagannath Sanjay sir is also knowledge 2024 classes. OTS schemes restructure. Skill 45. Yes, sir. OTS schemes, wherever this recent exam, whatever appeared, only relevant that only we will go through. First one regarding agriculture. Yes, there is one question. This is Circular 628 by 2024. Compromise settlement for agriculture loans with aggregate combined limit up to 50 lakh rupees. Here, first one is eligibility, because latest one and the current already they have asked. For you also, this is important for exam in case of OTS scheme. Earlier it was 25 lakhs, now it is enhanced to 50 lakh rupees here. So first one is eligibility. NPS more than 12 months, that means doubtful assets and loss assets, number one. For that liability up to 50 lakhs. And second one, repeatedly restructured accounts. Here, it is at least 2 times restructured agricultural account, at least 2 times restructured, for them sanction limit up to 5 lakh only they are eligible. That too after 6 months from slipping to NPA. Before slipping to NPA, restructured at least 2 times. So here one is eligibility. Eligibility doubtful and loss up to 50 lakh rupees, number one. Number two, repeatedly restructured accounts up to 5 lakh rupees liability. And after 6 months from date of slipping to NPA, they are eligible. So two things here. And not eligible, again, these are common guidelines: GL, AL, tractor loans, SARFAESI, and other securities like NSC, LIC, etc., whatever available, they are not eligible. This is common guideline. And here, settlement formula, first one is sanction limit up to 5 lakh rupees for doubtful 1, doubtful 2, doubtful 3, and loss asset. And repeatedly restructured after 6 months from slipping NPA. That means up to 5 lakh rupees liability of eligible accounts. These two are eligible accounts. What is the formula here? Original loan amount disbursed, less recoveries and debt waivers if any. So whatever amount we have disbursed minus recoveries. That is the settlement formula for accepting this. Next, above 5 to 25 lakhs. Second one formula. Doubtful asset 1, original loan amount disbursed plus simple interest at the rate of 6% per annum plus other expenses minus recoveries and debt relief. So here, apart from original loan disbursed, 6% simple interest we charge DA1, DA2 4% interest, DA3 3% interest. And loss asset, there is no question, only whatever this first equation is there, that is original loan disbursed less recoveries and debt waiver. So here no interest for loss assets. This is up to 25 lakhs formula. And 25 lakhs to 50 lakhs formula, 1% extra rate of interest. That means doubtful one, here 6% it is there up to 25 lakhs, here 7% simple interest up to 50 lakhs. And doubtful 2, 4% interest. Here doubtful 2, 5% interest. This is up to 50 lakhs. And doubtful 3, here 3% interest. And here it is 4% interest, 25. So 1% extra than even up to 25 lakhs. Loss asset, same formula, no change. Original loan disbursed less recoveries. Right? Next, fresh finance to OTS settled non-willful defaulters. In case of weaker sections, who settled OTS full amount after 7 days. KCCS to the extent of original sanctioned amount of OTS settled account as per scale of finance, whichever is lower. So we can sanction loans to, again, loans to weaker sections after 7 days of settlement. OTS full amount paid after 7 days, we will sanction. What is the amount we will sanction? Earlier OTS settled whatever that loan original amount what was there, that amount, or as per scale of finance, whichever is less, we will sanction. This is fresh finance for OTS borrowers. Next, unapplied interest calculation. Earlier, we have seen this same substandard 1 year MCLR plus simple interest at the rate of 1.25%. Doubtful assets 1 year MCLR minus simple interest at the rate of 1.5%. Next, loss assets 1 year MCLR minus simple interest at the rate of 3.5%. This is for calculation of unapplied interest. It is only for internal purpose, for delegation of purpose. Deciding authority, who is delegated for this? For that only this one. Next, time limit. Branch RO 3 months, CO 6 months, HO sanction 18 months. Interest on compromise amount, this earlier we have seen 1 year MCLR plus 1.5%. Next, waiver of interest on compromise amount. Normally up to 3 months permissible by sanctioning authority. CO head up to 6 months they can waive. HO beyond 6 months up to 18 months they can permit waivers. Right? And formats 50,000. Next, of course, other schemes I will not cover because I will half an hour time I will discuss restructuring proposal, main one. These are other schemes, 1.6 lakhs. This one question they asked in this. Almost similar points will be there. Only equation you have to see eligibility and other things. Now we go for restructuring of accounts. Another important one. For 4 to 5, there are nearly 5-6 questions in all 3 exams I have seen. on restructuring. That is why this restructuring also I will cover for you for exam purpose, whatever is important, right? Circular 346/2024. This is regarding consolidated circular on restructuring of advances. Here, three periods are there: review period, monitoring period, and specified period. These three periods for exposures 1,500 crores and above. Earlier, whatever questions they asked, it is for SME only restructuring. In our 1 to 2, 2 to 3, and 3 to 4, they asked about SME restructuring questions. But since it is 4 to 5, only these 3 points I will cover for you. 1,500 crores and above. 3 periods are there. One is review period. What is this review period? Once a borrower is reported to be in default by any of the lenders, because in consortium or MBA, branches shall undertake prima facie review of the borrower account within 30 days from the date of default. If in some bank parties default is there, they will report. So we have to review that account within 30 days. This is called review period. Second one, monitoring period. Monitoring period means from the date of implementation of resolution plan. Here resolution plan already decided and implementation started. So from the date of implementation of resolution plan up to the date by which 10% of the outstanding dues total, whatever the restructured dues are there, out of that 10% party has cleared. That is called monitoring period. So from the date of implementation of resolution plan up to 10% of the dues paid, repaid, that period is called, it is monitoring period. And the next one is specified period. Specified period, don't get confusion for SME and for above 1,500 crores. SME specified period is different. Above 1,500 crores specified period is different. So here specified period means from the date of implementation of resolution plan up to repayment of 20% of the amount, and maximum period 1 year, at least minimum period should be 1 year. Not maximum, minimum period should be 1 year from the date of implementation of resolution plan. This is called specified period. So for 1,500 crores and above liability restructuring, specified period means from the date of resolution plan up to the period 20 by which 20% of total dues are repaid. That restructured dues total, whatever it is there, 20% of total dues are repaid. So up to that period we call specified period. And here again minimum 1 year time. Right? So now process of restructuring, all whatever we do, this we will discuss separately. Now, satisfactory performance. I will directly go for others so that, yeah. LLR 1 to 2, they asked this question. LLR. What is LLR for restructuring of accounts? It is 1.25. Always it is standard. Equation for LLR is present value of available cash flow during loan life period divided by maximum amount of loan. For example, I will tell you today 25 crore SME loan is being restructured. Say 20 crores. 20 crores SME loan is being restructured. Today liability is 20 crores. And security value is 25 crores because margin will be there. 25 crores is security value. And another 10 years repayment period is there. So entire this 10-year repayment, every month some amount they will repay. For 10 years total, they will repay approximately 30 crore rupees because with interest they have to repay. So here available cash flows during loan life period is 30 crores divided by amount of loan today it is 25 crores. So 30 divided by 25, it will be 1.2 something it will come. This is what loan life ratio, LLR, for deciding whether to proceed under restructuring or not. LLR ratio is important. If LLR is 1.25 and above, then decision will be taken for restructuring. If it is less than 1.25, decision again not that much easily they will take. So loan life ratio standard is 1.25. For you, they may ask what is equation. Equation is present value of available cash flow during loan life period divided by maximum amount of loan. Earlier I told you example, if you keep that in mind, easily you can answer LLR. What is LLR equation? Right? Next, legal requirement, debtor, creditor, etc. Right of recompense. I will come for SME so that I will tell easily. SME restructuring. Yeah. Framework for revival and rehabilitation of micro, small and medium enterprises up to 25 crores. This norm will occur. So here, two things. One is satisfactory performance. Second one is specified period and identification of enterprise. First one, how we will identify an enterprise for restructuring here. If there is erosion in the net worth due to accumulated losses to the extent of 50% of its net worth during previous account year. This is how we will identify for SMEs up to 25 crores. For restructuring, how we will identify there is an erosion in net worth during previous year due to accumulated losses to the extent of 50% of its net worth. So this is identification for SME. Then once if it is identified, and if again if feasibility study will be conducted here. Who will conduct this feasibility study? That restructuring agriculture name. Investment activities, poultry, dairy, agriculture, FITL, agriculture not required. Large and medium enterprises, micro, extent, viability, yes. Viability study, who will conduct outstandings not exceeding 25 lakhs, branch may complete that viability study they can conduct. Not exceeding 2 crores, that is 25 lakhs to 2 crores. The viability study will be conducted by chartered accountants or our PAC, project appraisal cell, or project appraisal group, or technical field officers, or valuers from the bank's panel of valuers or experienced viability studies. So they will conduct viability study up to 2 crore rupees. And beyond 2 crore rupees, viability study will be conducted by PAC of circle office or PAG of head office. In case of agricultural activities beyond 25 lakhs, assistance of AEOs or Agricultural Innovative Center at HO, they will conduct. This is who will conduct viability study, right? So viability study is conducted either by chartered accountant, PAC or PAG, or by branch, whatever it is, then it is decided as viability. So what will happen in case of restructuring? First, we will convert, number one, in restructuring, unrecovered interest in working capital and also term loans. It will be converted as funded interest term loan. Number one, FITL. Their repayment we will fix either 5 years or 7 years, whatever it is there. Number two, in working capital, whatever irregular portion is there, that irregular portion means beyond drawing power or beyond sanctioned limits, that whatever irregular portion is there, that irregular portion will be converted as working capital term loan, WCTL. So one is FITL, funded interest term loan. Second one is working capital term loan. And third one, whatever that interest in the arrears of your term loan installments, they will be refaced. So here three takes place. In this process, we will be charging lesser rate of interest in case of FITL, funded interest term loan. And working capital term loan also we may reduce some rate of interest. and you are refacing term loan installments. That is today's amount receiving, instead of receiving now today, you may be receiving this amount after 2 years. So here we are losing some amount. This is called banker sacrifice. Whatever we are sacrificing this amount during the process of restructuring, we are having a right to recover once the unit is earning profits. So this right is called as right of recompense. Number one, right of recompense. This is recent question. It is asked in 2 to 3 recently. And the second one is satisfactory performance. Second one, satisfactory performance during specified period. These three again. So specified period again. Specified period means it is 1 year from the commencement of repayment installments. In restructuring, we will be refacing installments. Term loan installments are refaced. We will give some 1 year gap. Again, repayment holiday. After repayment holiday, repayments will start. So from commencement of repayment up to 1 year period, we call it as specified period. Number two, this is recalled question. What is specified period? Specified period is up to 1 year from commencement of installment. Here again, longest, wherever we have given longest tenure of that repayment holiday. Suppose for working capital term loan, you have given 6 months holiday. For term loans, you have given 1 year holiday. You have to take longest repayment holiday 1 year. So from 1 year, again, you have to calculate further 1 year. So from commencement of repayment installment up to 1 year period, we call it as specified period. During this specified period, if satisfactory performance is there, what is again satisfactory performance? Satisfactory performance means there are no overdues for more than 30 days. There are no overdues for more than 30 days during this entire 1 year period, number one. Number two, at the end of year, 1 year satisfactory, that when at the end of this 1 year period, account is regular without any overdues. So this is specified period 1 year. Up to 1 year, no overdues beyond 30 days, and at the end of 1 year, account is regular. Then we call it as satisfactory performance. What is the importance of the satisfactory performance and also specified period? This means at the end of this 1 year specified period, the account can be upgraded if it shows satisfactory performance. This is the importance, right? So right of recompense, one we are having, right? Second one is specified period up to 1 year from commencement of repayment installment. Third one is satisfactory performance. Satisfactory performance means no overdues beyond 30 days during entire 1 year period, and also at the end of 1 year, account is regular without any overdues. Then we call a satisfactory performance. So three important one. Then in recent, again, another one question they asked, what is the DSCR permissible under restructuring? Debt service coverage ratio, DSCR permissible. So here one generally 1.2 DSCR it is permissible. For normal sanctioning, we take 1.5 DSCR average. But for restructuring, 1.2 DSCR normally we prescribe. And for micro enterprises, up to 1 DSCR is also permissible. So this is recent recalled question. What is the maximum DSCR permissible is? Maximum DSCR 1.2 generally for medium enterprises or small enterprises, and up to 1 for micro enterprises. This is second one. And third one, ROCE, return on capital employed, ROCE. ROCE, it is linked to your 5-year government securities rate. ROCE. 5-year government security rate. Here two types ROCEs. One is for medium enterprises and small enterprise. It is 1% above 5-year government security yield rate. For medium enterprises and small enterprises, 1 year above 1 year plus, 1% above 5-year government securities yield rate. So if government securities, 5-year government securities yield rate is 6%, let us take an example. 1% you have to add. So 7% should be your ROCE, return on capital employed. And for micro enterprises, only 5-year, the micro enterprises ROCE is not applicable. So these two and other ratios also I will show you. So that LLR1 I told you 1.25. Here. This is higher one, rate of recompense. We have discussed this. Next one, in restructuring, this is also one important point. Promoter sacrifice and additional funds brought by them should be minimum 20% of bank sacrifice or 2% of the restructured debt, whichever is higher, and it should be brought upfront. This is also earlier olden days they used to call very frequently, recalled question. Earlier days they used to recall. Promoter sacrifice and additional funds brought by them should be minimum 20% of bank sacrifice or 2% of restructured debt, whichever is higher, it should be brought upfront by the borrower. It is what promoter he has to bring. So this is what promoter sacrifice we call in restructuring. Next, what is the viability time period? Here also, viability. The unit should become viable in 8 years if it is engaged in infra, and 5 years in other cases, viability. 8 years infra and 5 years in other cases. This is what viability. And extent of bank sacrifice also. During restructuring process, what is the maximum extent of bank sacrifice generally we consider? So here it is generally 15% in case of larger units. Sorry. Extent of sacrifice. For large and medium industries, sacrifice is not more than 10%. And for small units, that is micro and small enterprises, it is 15% maximum sacrifice. That's what I'm seeing. For small units, our sacrifice will be more. For larger units, our sacrifice will be less. So for larger units, our sacrifice is maximum 10% of the restructured amount. And for small units, it is 15% of the restructured amount to the bank. Right? DSCR 1.2 and 1, we have seen this. ROCE up to 1% above 5-year government yield rate, that are security yield rate, that also we have covered. LLR 1.25, that also we have covered. Micro enterprises, maximum repayment up to 10 years we will give in restructuring. Large and medium enterprises. Large and medium enterprises, 7 to 10 years repayment. Micro, it is 10 years repayment. Conversion of debt into equity, it is only for bigger units. Real estate. Performance. Specified period, yes. Specified period, we have discussed this. Specified period means a period of 1 year from the commencement of first payment of interest or principal, whichever is later, on the credit facility with the longest period of moratorium. Already we have discussed it. Identification, erosion more than 50%. Already we have seen that. For upgradation of the accounts to standard assets, only if it shows satisfactory performance during the specified period. Already we have discussed this point. Satisfactory performance means no overdues beyond 30 days. That also we have discussed. So up to this SME restructuring, for exam purpose, it is sufficient. Then we will discuss another 2-3 points of restructuring in case of agricultural advances. Agricultural. Normally, KCCs, in case of KCCs, due to your natural calamities, etc., they will convert entire liability in 3 to 5 years in suitable installments. Gold loans haito maximum 1 year additional repayment we will give. And in case of investment loans, maximum 3 to 5 years we will give. Development loans also 3 to 5 years, at most 7 years, including moratorium. For agricultural advances not exceeding 25 lakhs, DSCR not less than 1.25. And for SME, we have seen 1.20 DSCR for medium. And in case of micro and small, it is up to 1, we can micro up to 1 we can accept. For agriculture, DSCR 1.25 minimum. So it is a little more than SME DSCR. IRR current ratio 1.14. WCTL, creation of FITL. So this recalled questions here, we are coming for natural calamities here. Natural calamities here, fifth point. Branches can allow a maximum period of repayment up to 2 years, including moratorium period of 1 year, if crop loss is between 33% and 50%. So if crop loss is between 33 and 50%, then maximum 2 years we will permit, including moratorium period of 1 year. If crop loss is more than 50%, 50% or more, in such cases, up to maximum 5 years, including moratorium period 1 year, we will give refacement or restructuring. This is for agricultural loans. Normal calamities, it is in case of natural calamities, if loss is between 33 and 50%, 2 years maximum period we will reface. And if loss is 50% or more, up to 5 years, we will reface. Retail lending, these are not required. Yeah. So this is one recalled question again, recent 2 to 3 exam, this question has come. Project loans revisions or deferment of DCCO and the consequential shift in repayment schedule. Whatever DCCO, date of commencement of commercial operations. At the time of sanctioning term loans, this project loans particularly, as per project report, we will fix the DCCO, date of commencement of commercial operations. For any genuine reasons, the DCCO may be extended by 2 years in case of infra and 1 year in case of non-infra projects. We will extend. This is what extension of DCCO. But this extension is not treated as restructuring, number 1. Number 2, apart from this, again, if for genuine reasons, that means parties' fault is not there, borrower's fault is not there, but still some delay is occurring. In such cases, another 1 year extension is also done, number 2. So first one is 2 years extension from original DCCO. In case of infra, 2 years. Other than infra, 1 year. First extension. Second extension, another 1 year if it is not in the hands of party. Up to that period, standard asset provisioning is 0.4% only. This is 2 to 3 recalled question recently. Exam. For extension of DCCO, first 2 years and then another 1 year. In case of infra. Non-infra, first 1 year, then another 1 year, non-infra. Up to that period, it is considered as standard asset, not restructured, and provisioning is 0.4% only. If you are extending by another 2 years after this, then your provisioning is 5% for standard assets because it is treated as restructuring. Though it is not restructured, it is treated as restructuring. That means first 3 years and another 2 years, 5 years for infra. And non-infra, first 2 years plus another 2 years, 4 years for non-infra. In such cases, provisioning is 5% for standard assets. This is important for your exam because previous point they asked for 2 to 3 and this you may expect 5% on standard assets provisioning. In case of extension of DCCO, beyond 3 years in case of infra, beyond 2 years in case of non-infra, right? Next, last point in infra is diminution in fair value. What is this diminution in fair value? Diminution in fair value means during the process of restructuring, the economic value of the asset will come down. Here you see, bank will have option of notionally computing the amount of diminution in fair value in case of advances extended by all branches and providing thereof at 5%. What is this diminution in fair value means? We will be losing some economic value due to restructuring. Because of the loss in economic value, we have to provide additional provision in the place of diminution in fair value. For this, we have to calculate separately for small loans up to 1 crore rupees. Instead of doing calculations in diminution in fair value, straight away branches providing 5% of the total exposure in case of all accounts. Wherever we have refaced or restructured loans up to 1 crore rupees, for all those loans, we will provide 5% extra provision on standard assets. This is for diminution in fair value. And beyond 1 crore, we have to calculate. This is also one provision for diminution in fair value up to 1 crore rupees liability, 5% extra provision. Right? These are few points I want to discuss about your restructuring. So in restructuring, since there are 4-5 questions I have seen in recent exam restructuring. One, they asked about specified period. Second one, I have seen about LLR. For 1 to 2, they asked LLR. And third one about DSCR also they have asked. So apart from that, which are not covered, I told you LLR equation, whatever present value of expected cash flows over loan life period divided by present loan liability. It should be at least 1.25. This is loan life ratio. And specified period I have already discussed. What is specified period? It is 1 year from the date of commencement of repayment installments. Up to 1 year. That is specified period. During specified period, satisfactory performance. What is again the satisfactory performance? No overdues beyond 30 days during entire specified period. And at the end of specified period, account is regular without any overdues. Then it is called satisfactory performance. If account shows satisfactory performance during specified period, it is eligible for upgradation to standard assets from substandard, because once account is restructured means immediately it will become NPA from standard category. It is RBI guideline from 2014 onwards. And only exceptions wherever government, RBI is giving special permissions like COVID, they have given special permission. So in such cases, we need not classify it as NPA. Otherwise, if you are classifying, if you are doing any restructuring, account should become NPA immediately after restructuring. That is guideline. So when it will again become a performing asset, upgradation after specified period, if it shows satisfactory performance. That is 1 year from the date of commencement of repayment installments. This is second one. So LLR, your specified period, satisfactory performance. And the next one is your debt service coverage ratio. I told you 1.2. It is for larger one, medium enterprises. And one up to 1, it is for small and micro, it is eligible. And number 2, ROCE, return on capital employed, ROCE. ROCE is 1% plus 5-year bond rate, government bond rate. For micro, it is not eligible. For others, it is 1% plus 5-year bond rate. This is ROCE, return on capital employed. Okay. So these are important points for current exam about restructuring. So today I thought of covering even the credit policies, some uncovered by my friend Ravi. Anyway, those points again tomorrow I will cover. Whatever points are not covered in credit policy, and apart from that, other general matters also where Ravi has not touched, and important for current exam. Wherever they have asked. Yesterday, actually, I have seen our question paper. In question paper 3 to 4, I will tell you deposits 12 questions they asked, deposits made, and NI Act of course two only. IT 11 questions they asked in IT, and miscellaneous policies 20 questions have come. Agriculture and priority, 9 questions have come in that. And MSME, only 4 questions. General advances, credit risk management and CRM policy, 19 questions have come. For 3 to 4 only, I am telling analysis. NPA, 9 questions have come, including restructuring. NPA, 9 questions have come. So that is why we have taken a little time for your restructuring, NPA, and the credit policy and CRM policy uncovered. I will cover tomorrow, plus other important aspects. So with this, today we will conclude our session, because to take up a new, again, time is only 9:25, it is already. So today we will close the day. Tomorrow we will cover remaining aspects. So thank you, friends. Thank you for your active participation in this program. Yes, sir.
Sir,
Shall we
thank you,
continue?
sir. Thank you, sir. Thank you so much, sir. And if anybody want to ask anything, can
Yeah,
we?
sure, sir. Most welcome, sir. Most welcome.
Sir, slides of restructuring
Sir,
provide
here
another
2-3 questions I have seen. Slides, of course, I will share, and already it is available. Again, I will share. Second one, 1,500 crores. It is not lakhs, sir, because at present RBI has given restructuring guidelines for 1,500 crores. About 5 years back, it is given, and afterwards RBI told I will give instructions below 1,500 crores also, but so far not given. And for SME restructuring, yes, we have taken up. And content segregation, okay. Sanction committees, RSA. Recalled questions, yes. Share any question?
Please touch on recall questions, sir.
Yeah, sure, sir. Recalled questions available. I have already written whatever recalled is there. Anyway, tomorrow, first I will discuss in chapter wise, and then we go for in deep in that, sir. Recalled questions, all I have listed topic wise. 2 to 3 and 3 to 4 only I have listed topic wise. 1 to 2, of course, I have gone through. Tomorrow, what I will do, while telling that topic, suppose tomorrow I will start with CRM policy, whatever CRM policy and credit policy they have asked, then I will cover those related. Normally, whatever circulars they are having, in those circulars, they may touch questions. That is why today I concentrated restructuring, because I have seen 4-5 questions in restructuring. That too important
Thank you, sir.
point.
Thank you very much. Thank you very much for the support, sir.
Yeah, thank you, sir. And thank you. Tomorrow we will meet again, sir.
Thank you, sir.
Thank you, sir. We'll end the session, sir. Thank you, sir.
Yes, sir. Thank you, sir. Right, sir. Thank you.